Markets Now is brought to you by the 5-year anniversary of Brevant Seeds. Here's to 5 years of not just winning, but collecting one game-changing W after another. See all of our wins at Brevant.com/wins.
Welcome to Markets Now. I'm Michelle Rourke with Rich Nelson of Allendale, and some mixed closes in both grain and livestock futures trade today. But Rich, let's start off talking about corn and soybeans, both seeing some lower trade. The funds are back in selling. Is it tied to weather, crop ratings, or what is the story?
I think in the very short term, kind of a mix of everything. The simple fact is, on the weather side, we did have a change in the forecast for Monday. So instead of this dryness coming along with heat, looks like heat, but maybe some moisture will be the current story as it stands right now. Crop progress numbers on the corn side, no change from the prior week on Monday afternoon's report. That still implies strong yields, 186, maybe just over 186. And as far as the soybeans, even though we did drop off in terms of this crop rating on Monday's report, it still does imply lightly above trend yields. And along with soybeans, especially, we still have a bit of concern regarding this new crop export picture as we still wait for this China news to be filtered out here.
Yeah, we'll talk about the China news in a moment. As far as crop ratings, we know that's kind of a beauty contest. 74% good to excellent on corn doesn't necessarily account for some of these pollination problems that we're hearing about. Do you think the market is adequately factoring that in?
I think for right now it is, and it's doing the best job it can. Obviously, we're going to have to wait a few weeks to actually get on the field and see how this pollination issue is turning out. So we still have some questions. And as it stands right now, the market really is going to say, I'm going to be hesitant yet to believe these issues until they're shown directly to me. So until we learn how large of a problem issue this may be or may not be, I think this trade's going to be hesitant at this point, at least right here, to get too concerned here in the short term.
Talk about the technicals in the corn market, Rich. We failed to completely fill the gap area in December corn. Now we've taken out support. Are you thinking we're vulnerable here to more downside?
Think we can argue maybe in the short term, maybe over the next 7 days. As far as the discussion on the chart gap, 432 and 3/4 was our still point left over here from that daily chart gap on the upside. So that was we failed to fill that one. Also, we got to keep in mind we are still in a downtrend. The downtrend line won't be violated until 435 on D's corn. So yes, in the short term, we got to suggest that this recent rebound attempt has been a failure so far.
We had chart gaps we didn't fill in November beans either. And now I think we're below 100, 200-day moving averages. Do we keep going lower there too?
Soybean side, kind of the same story. 1037 is that downtrend line, and just past that is that chart gap as well, 1044 and a quarter. So corn and soybeans in the short term would be seen as rejecting that attempt for higher.
So, Rich, what are your thoughts about how much more downside risk there might be to soybeans, considering we got news that President Xi and President Trump are going to be meeting soon? Will that give the market enough hope to keep these prices intact for a while?
I do think so, at least for the very short term. And keep in mind, we can argue maybe a little more downside on the corn side, maybe 405, 410, but it's soybeans which really have a lot of potential room if this is not fixed up here as far as this trade discussion. A lot of room still waiting on the downside. Soybeans currently have priced in about 200 million bushels of export risk due to the China issue as well as the EU concerns. So that 200 million bushels, it could balloon to quite a bit more if we don't have this trade issue fixed up in a month and a half or so. Another issue with soybeans, which is a bit of concern, Brazil is still cheaper than us for new crop export bids, right in our own heart of our own export season.
But, Rich, if we do not get anything resolved with China before this fall, we're going to miss our export window, aren't we?
We certainly will. And this is a bit of concern here. So we have China, which is about 52% of our exports. On top of that, we still don't have an agreement lined up here with EU. They're about 12%. So we do have two major hitters, which, and considering the fact that the U.S. export season is quite compact, basically from now until November, December, we've got to get some sales done. So this is our time where things can get a little out of hand if we don't get this fixed here.
And as long as we're talking about trade, we're ramping up to the August 1st deadline here for tariff increases for countries including Japan, South Korea, a lot of the big heavy hitters. So What will the market do? Will it be concerned about that and sell off going into that time period?
I think in the short term, at least for corn, maybe we can say it's not as dramatic of a concern here. So corn, we're looking obviously Japan, South Korea, Mexico, and Canada. Mexico's probably going to buy from us no matter what, so that's not the major concern. The other issue with which is a little positive on the corn side is new crop sales are still relatively on target. It's not anywhere as bad as soybeans. So I think on the corn side, they can say until we see consistent weak sales, maybe they're not going to get too concerned if we miss that August 1st deadline.
Okay. Wheat market. We did bounce today. Was that all short covering activity? Because we've been waiting for this market to bottom here for a little while. Can we confirm, or what's it going to take to confirm a bottom is in?
I think on the wheat side, we've got to get USDA's numbers certainly for spring wheat fixed. The crop ratings numbers, which are about the sixth worst out of the past 30 years for this week, do not match up with USDA's current production estimates. So USDA is overly optimistic, and the market wants to see that fixed. The other issue, which we got to point out, is from a feed pricing basis. This falling corn market is not positive for wheat. So we also have to see some stability on the corn side. In the short term, we did see here today that Russia's wheat production estimates would be declining from their prior estimates. It's still an okay number, though. So I think in the short term, we still have some other questions in front of us before we can really confirm a clear bottom on the wheat side.
So let's talk about the cattle market. We did see the market kind of consolidate here, live cattle, after some record highs yesterday. So do you think that market is just kind of waiting here until we get the cattle on feed and inventory numbers? Are we just squaring ahead of that?
I think you can make those arguments here. In the short term, this market is still holding a discount. So we traded cash cattle 229, 230 in the south here last week, and this market still is implying 226 by August, 220 by October. So until we see cash cattle resume the downtrend, a lot of the trade will still hold this belief that maybe the futures discount is a bit too much. As far as Friday's cattle and feed report, trade estimates right now are really not too dramatically exciting. Maybe placements down 1%. So we may not see a market mover. One thing which we'll have to watch very carefully for the long-term supply picture is that cattle inventory report. It should confirm that we're still dropping in terms of beef cow numbers, but the rate of decline may be slowing, which is something we'll have to watch very carefully. And certainly that determines a lot of the 2027 into 28 beef production numbers.
Cash has still been king here in the market. We were just a little bit higher in the weighted average last week. Do you have a sense of whether we'll be steady or better this week? And will we wait until after the big reports on Friday to trade cash?
In the short term, I think even though we still have some questions about this falling wholesale beef market, I do think that cash might be able to trade more steady-ish here for this week's discussion. So I do think that's a little positive issue. Also, we've got to point out, even on the sale barn side for cash feeders, this is still an amazing market. Another big jump here in Monday's Oklahoma City trade. These 7-weight feeders are right now about 26% over last year. So I think in the short term, there's still momentum on the live animal side that may be able to be quite different here than the wholesale beef side.
Right. And while I said live cattle kind of consolidated, some of these feeder contracts hit all-time highs again today, didn't they, Rich?
Certainly right. Yet again, here, this uptrend is still so far not yet broken. And certainly on the feeder side, it seems like we have not found that price where we're seeing buyers walk away from this market in the very short term here.
Gotcha. So the hog market mixed today. We've been having a difficult time running up into chart resistance. What would it take to get through those areas? Will we get through them?
We've got to see a more sustained rally on the cash side. Keep in mind here, we have peaked for the year on cash hogs as well as cash pork. What we have going on right now is a temporary period of stability. Cash hogs over 10 days have rallied maybe a total of $2, a really small rally, so to speak. A little bit better in a wholesale pork. About 12 days, we've rebounded about $8. So that's a little positive news. We have a temporary lull in what is now a general downtrend into the winter period. I do think that in the short term, though, by the end of this month, we'll start to see that seasonal supply increase beginning to show on the weekly kill numbers. So we have a temporary lull until cash hogs really show any better strength. Maybe this is maybe a stopping point for this October contract.
And as we ramp up to that August 1st tariff deadline that we talked about, is the hog market going to have some concerns here, as export dependent as it is?
That's a really interesting story because so far the hog market has completely ignored all of the tariff issues and tariff disruptions. I find that really interesting, especially considering how important Japan and South Korea are to U.S. pork exports. And keep in mind, for the pork side, that's about 24% of all U.S. production. So it's a big deal, but I find it really interesting. Futures have so far ignored it completely.
That is really interesting. All right. Thanks. Good stuff as always. Rich Nelson with Allendale. That is Markets Now.
You were right.
You were right.
You were right.
Well, you were right.
When you choose your seed brand, there's winning, and then there's...
You were right. Should have gone with Brevant seeds.
When you choose Brevant seeds, you don't just win. You get to be right. Don't just win. Win. Talk with your retailer or visit Brevant.com/win to get started.